What's up, everybody? Michael and Coco here. You're watching episode 18 of the Weekly Scan.
The Weekly Scan. Shabba dibba dibba bow bow. Come back over here and give me kisses.
The Weekly Scan is all about finding opportunities in the stock market for the week ahead. In today's episode, we're going to be using technical analysis to review 7 different stocks. And as for a quick disclaimer, these videos are for entertainment and educational purposes only. If you do not have experience in the stock market, please ignore our opinions. Each of the stocks within this episode have a beta of over 1. If you are unfamiliar with what beta is, please look at the video in the link in the description or up here at the top of the screen where I go into detail on what beta is. In short, a high beta means high volatility. All right, with that said, let's hop in to the episode. Well, all right, welcome to the computer. We are now going to discuss 6 different stocks, and we're going to look at the charts, map out support, resistance, patterns, and how I would potentially go about trading these setups. So let's just go ahead and hop right into it. The first one we are looking at is ticker symbol MO. Now the pattern that I want to point out here is known as an ascending triangle. As you can see right here, there has been an area of resistance that this price has been struggling to get through. It's right around $42. You can see the price labels here: $41.86, $41.48, $41.45, $42.22, $41.98. So it's been struggling to break above the $42 price range. However, if you look at the bottom of the chart, notice the trend line moving upwards. Now, what's very interesting of this type of a setup is you can see that the stock is making somewhat of a staircase to climb higher and higher, meaning that the psychology behind this is that the bulls are trying to take charge and squeeze more tightly to this resistance range to potentially break out. Now, as you can see on this pattern, this lower trend line, the price is just about sitting on it and potentially might break down lower. It could potentially do that. So there's a couple ways that you can go about trading this. You could, one, wait for a breakout and then trade $42 and higher. If the price does break out, make sure that it breaks out on high volume to give you more confidence and clarity that it's a breakout that will continue moving higher. Another way you can play this is by simply just buying into a position as of right now and speculating that the price will potentially break out. If you do that, right now where the price is sitting, you have a good risk versus reward trade. You can be buying in shares right where the price is around here and having a tight stop loss just below the trend line, or even potentially lower than the 50-period moving average right around 37.98. Now keep in mind, this is a very volatile stock, so if you purchase shares up here where it's at about $39, the price, if it drops to $37 and you get triggered, that's a $2 per share move. So if you bought 100 shares, do the math, that'd be losing $200. It really depends on your trading style and strategy of how you would want to potentially trade this. Me personally, I like waiting for the breakout and for it to close above it. I also, though, like the speculation purchase where you can buy before it breaks out, because sometimes when you do that, you get a higher reward, although you are taking on more risk. Notice the 200 period moving average. It's right here at 41.48. So that is the Godfather moving average right there. That in the 50 period. The 50 is below the 200 period moving average. So keep in mind the context of the chart. It's not really bullish. However, with its patterns kind of building up momentum to the upside, might result in a future breakout. So put this one on the alert list and keep an eye, because this potentially might be moving higher. Let's move on to the next. Here is ticker symbol TNDM. And very similarly to the previous chart, it looks like an ascending triangle took place. However, the difference is that it actually already broke out to the upside. And look at that breakout, boom, right there on high volume, which leads me to believe that this is not a false breakout and the price could continue to move higher. If you look at all the moving period averages, I use the simple moving period averages. The green one is the 20, The blue one is the 50 and the red one is the 200. They are all moving in a bullish direction. So this gives me more confidence knowing that this is a true breakout and we could potentially see more new highs. However, how I would play this is because we already missed the breakout, we would have to wait for a retest of this $90 range to potentially see the price move higher. Now, if you didn't feel like the price is going to be moving down back to $90 for the retest, which typically sometimes you do see prices turn back to retest previous breakout points, because once it's resistance, it then becomes support. You typically see a retest. Now, these highs right over here, 92.95, you have 92.37, 91.85. This could potentially just consolidate sideways and create a bull flag to potentially move higher. So if it doesn't reach all the way down to $90, you might be safe picking up shares right around $93. Or if you want to be very patient, just wait for 90 and have a tight stop loss. Me personally, I like being very patient and I like having tight stop losses. I do not like risking a lot of money. I like risking very little money for a potential good reward. All right, that is TNDM. Let's move to the next one. Before we move to the next one, Coco wanted to say hi. She's been resting there on my lap. All right, the next ticker symbol we'll be discussing is ticker symbol GOL. And right out of the gate, I see a nice area of support at $6.50. Then the pattern that I see is somewhat of a descending triangle, meaning that the highs are becoming lower. It's moving into bearish context. However, overall chart is in bullish context. You saw that big run up here, and then the 50 period moving average is right here, sloping nice and upward. And then you have the 20 period moving average pretty spaced out between it, which is somewhat bullish. The price action recently just broke above the ascending triangle. However, it's struggling to make it above the 20 period moving average. This right here looks like it's really just taking its time to consolidate to potentially make a higher move to the upside. Now, how I would trade this is I would be a little bit more patient for the price to come down just a little bit more. Notice that this was somewhat of a big day. I mean, down 2.5% in a single day. Struggled to make it above the 20 period moving average. If we do get a close above the 20 period moving average, I do see that the trend might continue to move on to the upside. How would I play this? Well, I would either one, wait for the price to come to me down here at the support and have a tight stop loss. So that would be, $6.55 with a stop loss of $6.47. Or if you want to be very, underneath the low of this candle here, 632, and give it, 15, 20 cents range, you can do that if you can tolerate that type of risk. Overall, it has built this nice solid base right here where it does look like the price wants to move higher. However, we cannot guarantee that. So the best thing that we can do in this scenario, if you like these type of setups, is manage your risk. And the way to do that is one, be patient for the price to come to you and have a tight stop loss. It does look like the volume is picking up. Notice how on these 2 days right here, it had increasing volume, especially when this little tiny doji candle, and then you can see that it's been accumulating more volume there. And then on the breakout up in this range, then you really saw it start picking up more volume. So what I'd like to see is a big volume day to give me more confidence that this price is going to be heading higher. The target that I would see right here on this chart would probably be just right around $10, especially if we get it closed above the 20 period moving average. And I would probably most likely mitigate some of my profits right here at $8.50. All right, let's move to the next one. The next ticker symbol is ticker symbol GNUS. Now, as you can see, there's been a lot of volume recently that just took place relatively to the previous days on the chart. The MACD indicator does look like it's about to curl over and start heading in a more bullish direction. However, you don't want to go ahead and hop in at this particular time on this breakout because you may have missed the boat already on this trade. So what you want to do in these type of situations is wait for a pullback. And if you're going to wait for a pullback, you need to look for an area of support that was previously resistance in order for the price to come back and potentially bounce from. The area that I see on the chart is right here at $3. Notice how it acted as support right here, resistance right here, and then resistance right here, and now the price recently broke above that. So if the price can pull down to say a $3.01, it'll offer up a good risk versus reward trade to potentially see a move continuing to a higher level. As far as a target area goes, this $5 range looks like a great spot to potentially take profits off the table. From $3 to $5 is a pretty large percentage point move. All right, let's move to the next one. Here is ticker symbol FRAN, and as you notice, wow, up 42% for a day. So an average investor that looks at line charts would be thinking, hey, this thing is moving very high. However, if you look at the candle that it formed, it opened up way up here above $8 and then crashed all the way down to $4.95. Leaving a somewhat of a little upper wick right here, which would indicate that there's a lot of buyers probably trapped up in here at that range. That right here is a very scary candle. Now look at the volume. The volume is increasingly huge for this day. So how would I play this? I would be looking for this price to head lower into an area of support. Previously, though, it was probably some sort of resistance. And the area that I see is right around $3.50. Notice there's a 50-period moving average just right around that area. And if I move the 350 across the board, notice how it acted as resistance here. It acted as support here, and somewhat of a support right there. So what I would like to see is this price to head lower into this area of support and then potentially see a bounce from that point. By buying shares at this point, it would offer up a good risk versus reward trade, allowing you to have a tight stop loss so you don't risk all that much money to potentially see a nice upward move. You'd be risking a little bit to potentially earn a lot of it. As far as the other indicators on the chart go, the RSI, it's not overbought and not oversold, and the MACD is not really giving us too much data. It does look like it wants to cross over and potentially head higher, but this and this here are lagging indicators, so you need to take that into consideration. All right, let's move to the next one. Here is ticker symbol DKNG. This is DraftKings. I want to first point out the context of the chart. It's fairly bullish here. We have the 20-period move in here, the 50, and then the 200. So you have the 20 above the 50 above the 200, and it has a nice spread between all of them, which would indicate that, hey, the overall context of this chart is bullish. Right now, what we're witnessing is somewhat of a pullback into the 50-period moving average. Now, when there's a pullback like this in bullish context, it does sometimes offer up a good area to purchase and buy shares. Now, as far as how I would trade this and patterns that I see, well, first I want to point out this little hammer candle, and the current price action right now is just above the 50-period moving average. The price is at 33.06, and then the 50-day period moving average is at 31.75. I want you to take note on how volatile this stock is. Remember, all these charts here have a beta of over 1. They're more volatile. This small move from $42.50 to $45, that right there, that small move between that axis is $2.50 a share. So be very careful, because one big day or even a small day, if you have 100 shares of this, moves $250. As far as the pattern that I see, it is somewhat of a falling wedge that just recently kind of broke out of it right here. Now, I would have liked to see this breakout on high volume to the upside, but it did not do that. So this could be potentially a failing pattern of a falling wedge. But I don't want to write it off completely. This hammer candle right here offered great support at the 50-period moving average. So if the price can come back down to the 50-period moving average, we might see this potentially move higher if support is held. This right here offers up a good risk versus reward trade. Right here at $33, looks like a nice area of support. So like I said, I would just have a very tight stop loss, probably just below the 50-period moving average, and I would try to pick up shares just right there at that level, so I don't need to risk much money. As far as the indicators go, the MACD looks pretty bearish. It is just kind of spread and heading lower. It doesn't show signs of turning too much around at this particular time, but keep in mind these are lagging indicators. The RSI is just kind of even there. It's not overbought or oversold, not giving us too much data. The only thing that we really have going for us on this chart, like I said previously, is the context that it's currently in. It's in bullish context. You had a nice pullback, so this can offer up a good potential buying opportunity to eventually see a move higher. All right, let's go ahead and move on to the next one. All right, so here is the last one of the day, ticker symbol JOB. Now, this is not a trade that you'd want to enter in right away by any means, and it might take some time or potentially might not reach our target area. The indicators that I want to first point out here is the RSI. It is very overbought, which means potentially we might see some selling take place. The next one that I want to point out is volume. Clearly, it was a gigantic day in volume. You saw a 192% gain in a single day. There is clearly a long upper wick on an inverted hammer candle, meaning that there's a lot of buyers that bought into this momentum that are now stuck at the price being right down here. So that is understand the psychology of that. It's very scary, especially if they haven't got out of the position yet. But now any normal investor that looks at, say, line charts and doesn't understand technical analysis, look at this 192% gain and might jump into the false hope that it's going to be heading higher. And not to say that it won't go higher or can't go higher, but overall, this is a very nasty candle. It's clearly an overbought territory. Now what we have to do in order to trade it is look for an area of support that the price can potentially come down to and bounce from. So right as I see it, I would be putting an alert right here around 50 to 60 cents. Let's say 50 cents, 53 cents. So the price would have to come all the way down from $1.50 to retest this window that it kind of gapped above. And the window that I'm talking about is from this point all the way up here, that big gap. If we can get the break down and have it retest this support, we might see potential bounce from that point to move higher. And if that is the case, that could potentially offer up some very good rewards. But you need to be patient, you need to set an alert, and this potentially might never even happen. So you just got to kind of keep an eye on it. All right, that is all I have for you on the weekly scan. I will see you next week on the next weekly scan, or if you watch my S&P 500 daily updates, I will see you on Monday. See you later.